Hello friends, good weekend, good week. How are you today? Vladimir here, and this is the weekly review for 21st of April 2013. Well, the last week was a very interesting week with a lot of short-term opportunities, but the last 2 days, actually even 2.5 days, were a bit zigzagging, as you can see, right? 4-hour charts, up down, very narrow range, and we got a lot of zigzags, okay, everywhere. Euro dollar, pound dollar, Aussie dollar, whatever, New Zealandian dollar, all related to dollar pairs, and that's mainly because of the G20 expectations that we have had on the last 2 days of the week, of the previous week. The question is how the things that we heard from the G20 meeting could affect on the markets. From my point of view, as generally, right? Nothing. It will not do nothing. They did not say anything new. They even refused to create clear red lines for the economical decisions. They said we will just do it in general, put the red lines in general, because they don't want to put too much pressure on struggling economies as they are anyway right now. But the most interesting thing for me is that they do not put too much pressure on Japan. Japan, as we know, increased their purchases, right? This increase pushed the Japanese pair all the way up, like 2 weeks ago or 3 weeks ago. Before that, when it was dollar yen was 94, 95, the pressure on Japan was bigger than it used to be after the second intervention. That's interesting, and I wonder why. And I would not be surprised if there was some money involved, you know, just in order from the Japanese side, just to keep the noises, the voices very low. Yet, as I will explain about the dollar yen and the yen pairs a bit later, but again, for me, it's very interesting sign. Now, what are the opportunities I see in front of my eyes for this week? During the last weeks, I explained what I think about the majors. That I think we should look for sell opportunities, mainly not buy opportunities. I explained what I expect from the yen pairs, from the Aussie Kiwi. That's actually the main opportunities we still have, so I will just update what we have, what I see there. And for the pound dollar, I remind you, on the weekly chart we have a bearish convergence, right? You can learn what convergence is, as you know, from my book and Amazon. Now, this bearish convergence means the pair could continue, actually should continue lower again, at least to the previous low, maybe even to the next low. The question is how it's going to do that. On a daily chart, it's pretty clear. We have here a flag now, right? It's pretty clear. We also had a continuing divergence, so the bearish pressure is also pretty clear. Now, a break below that flag with RSI going below 15, holding below, should open the doors for the further move back to 148 or so, maybe even to create new lows for this year, right? It could be straight breakdown, it could be break and retest. The sign, the first sign would be, of course, the break below this pattern. That should open the doors for the down move, with a protection above this resistance here at 153.50. Pound dollar should gain the ability to drop it down all the way. That's my first opinion. Euro dollar, well, I would say the same, but it's not. Looking on a weekly chart, seems that the pair is bouncing back from this 20 MA and the resistance, as you can see right here. Right, it's around 130, 170, and it seems like it has difficulties there. It's bouncing down. So the question is does the euro have enough of the bearish momentum right now to continue lower? Looking on a daily chart, it's pretty clear that this level is holding as a support, and I'm talking about 130, 130.15, something like that. If it managed to go below this level, the euro dollar, despite the fact that the 200 moving average is waiting for that right here, should gain the bearish momentum to push it all the way down to the previous support around 128 or lower. But I do want it to break below this 130, the psychological 130 first of all. In case it retraces from here up, I would not be surprised, as I mentioned on the previous weeks, if the euro dollar will push all the way to 132.50, 133, maybe even 134 range. To join this momentum, actually the bullish momentum, we need to see the euro placing itself, I would say, above this range, above 130, 120, 130, 150. It has to place itself above that and hold, not like it did here during previous Wednesday, when it pushed up and then crashed all the way down again. So just to cover both scenarios, if it goes above 130, 120, 50 range and hold above that, hold, I mean close above, retest and stays above, not like here, not like on the last Wednesday, yeah, but staying above this level and pushing up again, that will give us the okay to go for up. And once, as I mentioned, the previous resistances 132.50, 133 is the first range, closer to 134 is the second range the euro could rise. In order to go down, as I mentioned before, it has to break below the 130 and hold below. That should open the doors, despite the fact that the 200 moving average is here. Despite of that, it should bring us down to 128 at least. That's about the euro dollar. And how about the cross between these beautiful two? Well, if you remember my my reviews, I said it should close the gap. It almost completed it 100%. Now the euro pound is creating very interesting thing. It creates a flag as well. For me, it's still 50-50 if it rises higher to 0.8650 or even 0.87 before the continuation lower, or it goes down and breaks this level with the channel pattern. If it breaks it down, then, as I said not once, I would not be surprised to see the euro pound pushing all the way down to below 0.83. Watching on the weekly chart, it seems also, you see, despite of this 3 candles rise, the MACD is still going down. That's a bit suspicious sign from one side. From the other side, this is a bullish hidden divergence. So it's very, very interesting to see how it is acting from here. If it goes up and closes and places itself above the gap, no reason why it should not push to 0.87 or at least the previous highs, yes, right? If it goes and manages to break it down and places itself below the flag and below, I would say, even 0.8510, if it manages to place itself there below, with RSI crossing 50 down to gain a bearish momentum, that should open the doors for the bears to control this pair. In my opinion, as I said not once, I think down, and I think it's going to be duplicated. That's why I keep my bearish expectation. Again, it could also be changed in case the gap is closed, is broken up and closed above. For long run, I keep my bearish opinion, and the main reason for that is that I think that Draghi will be forced at the end to cut the interest rate by 25 base points. So that's my opinion about the euro dollar, pound dollar, and the cross in between them, the euro pound. So what's the next majors I see in front of my eyes? Well, let's talk about a bit about the New Zealandian dollar. You remember my words about this one on the previous week? I told you sell. If you don't have swap, sell and hold without any worries. If not, wait for a candle pattern, sell there. Got a candle, we got a drop down of 200 points. The question is what's next? Right now, New Zealandian dollar is fighting this resistance around the 084, 083.90. It should break it first in order to gain the momentum. Again, I'm looking for much deeper, much longer, term, and this is a monthly chart. I explained it not once. This divergence means something terrible is waiting for this currency. What, when, why exactly? It's question of time. It's not question of if. We should look for sell opportunities, not buy. This is my opinion. Looking on a daily chart, this seems again to be, it used to be a trade line like this. Now if we take a look, it just changed some angles, right? As you can see, just changed some angles. I do think if it managed to break this support, 083.90, 084, it should push all the way down closer to the lower Bollinger Bands on the daily chart and the 200 moving average. And if it manages to break this channel right now, right here, I think, in my opinion, we are going down and break of this channel, and the 200 moving average in this case should open the doors for serious down move, and that's what I think is about to happen. Another very interesting New Zealand pair, this will be the Aussie Kiwi. I've been talking about that for 2 or 3 weeks now. As I said, I think the pair is creating a bottom, but watching on a weekly chart right now, I'm not convinced this is the end. Let's say in other words that I will not be surprised to see that reaching this monster support range for this pair. I will show you something interesting. Take a look how many times, right, the Aussie Kiwi is moving on such intervals. Okay, take a look how many times, if it's down or if it's up. Okay, it's pretty much, take a look here. Okay, you see the down moves, it's moving pretty much on the distance, a bit bigger of course sometimes, right? But on average you see that, right? You see that it means that should be its place. That should be its place here, right? Watching on a daily chart, as I said, we have band to band. We could go for duplication. Duplication is exactly on the levels I mentioned earlier, and this trend line, if you pay attention, okay, here also brings us to the same place pretty much. It's of course could be treated as a channel as well, right? The bottom of the channel is somewhere like here. Now again, another reason why I think it will stop there, if it pushed down, it will be Bollinger Band duplication on daily chart, and that will create a continuing divergence. Continuing divergence on these lows will make the pair start to rise all the way up again. So in my opinion, I'm bullish, but I will not be surprised if on the short term, like 1, 2, 3 weeks from now, it will first of all push a bit lower to the levels I just mentioned, then push all the way up again. In order for this pair to gain a bullish momentum, it has to close itself above this 123 level, 122.75. Then I could say we're going up again. So this is my opinion here. The one thing to remember is that for Aussie Kiwi, you get swap. So there is no problem to hold this pair, even if it goes against us. Enjoy the swap, gain these pips overnight. That's all. Okay, don't be afraid to hold here some drawdown of 1, 2, 3, 400 points. It's nothing for this pair. With such lows, with such beautiful divergences forming, with such things on weekly chart, so many important supports. For my point of view, it's a great opportunity, and again, this is something to hold for several weeks. So I'm in, and I plan to hold it. I love such opportunities, as you know. Another New Zealandian pair, that will be the last one. That would be no, sorry, one bill before the last one. It would be the New Zealandian Canadian. I've been talking about this pair as well several times already. With this weekly bearish pressure and the monthly bearish pressure forming, look for sell opportunities. I think that to get a real bearish momentum, it still has to break below this trend line and this channel. But first of all, it has to reach the channel. To reach the channel, it has to break and place itself below this support and the 20 MA. Then we can say it will push lower more. If it goes higher, around 0.88 or a bit higher, go and attack again. I explained it on the previous week. I just repeat it again this week. Look to sell, but be careful not to overexpose yourself for the New Zealandian pairs, as if you short the New Zealandian currency, then you pay swap, except the Aussie Kiwi, right? So very careful with this one. You don't want to overexpose yourself here. And the one we still have running is as the pound New Zealandian. I've been talking about this for a long time, and you know my opinion. It's not going to change because I'm talking about the monthly chart. Could it drop lower? Of course. The lower, the better, as we have a monster divergence forming on the monthly chart. This could be from here. This could be from lower. Something huge is about to happen within several months. In order for this pair to gain the bullish momentum I'm talking about, first of all, it has to place itself above this channel that is forming right now. I want it to place itself above the 184. If it does, we go up all the way. If it does not, the bearish pressure is still strong. Right, so that's about the New Zealandian pairs. Now a few words about the yen pairs. As I said, I was a bit surprised to see the G20 kind of apathetic here with already to Japan. I will say one thing. I don't have these charts to prove here, but if you open another chart, the one that allows you to compare it to 1997, you will see something very, very interesting. I explained it, by the way, on my live trading room. If you heard it there, I'm sorry that I repeat it, but it's very, very important. Pay attention. This is 1997. On 1997, there was a clear action to decrease the value of the Japanese yen. Right? We got a beautiful up move. Then we got a correction on 1998. Then another push up on 1998, and then we all remember what happened. More than that, the crash on the markets, on the financial markets, happened because of that. That's exactly what started this strong down move on this period. What will happen this time? As you know my opinion, I said not once, I think the indices are going down, and I think the Japanese yen is creating a bearish cycle. Now, I think that this high should hold. In case it does not, I think it's going to 100, or maybe even the next high is like 103, 104, maybe, just to continue with this not normal move. But if this resistance holds, then I suggest go to the 4-hour chart, mark this small resistance here at 98.85, and if it manages to go below this level, that could be very strong sign that the dollar yen is going down. I will tell you what I see. You don't have to agree with me, but That's pretty much amazing from my point of view if it's real. I see here a megaphone. Maybe you can call me crazy, I don't know, but that's what I see, and that's okay if you don't agree with me. I see here a megaphone. Based on megaphone, the pair should go and place itself back to the meeting between these two spots. The first spot and the second spot from the bottom. In other words, if it managed to stop and push down, I think we have an opportunity here for 1000 pips move. So as long as the current resistance 99.50 holds, I think I should gain the bearish momentum, and I do want to confirm it with the break below 98.85. If it does, I would say we have a really amazing opportunity with pretty small risk, of course setting a stop loss above the last high. So my view stays the same for all the yen pairs. You know my opinion about the pound yen, exactly the same. I think down this week, next week, bit higher, all is okay. With such weekly divergence and such monthly hidden divergence forming, every new high will be just opportunity to sell and sell stronger. That's my opinion. For the euro yen, same story. On a monthly chart, bearish hidden divergence. Bearish hidden divergence. Right? So, well, and many resistances on the way. I think it still could play a bit higher, but it's going to create a top, and we're going to see a pullback all the way back to the monthly 20 MA, or maybe even lower. It's a clear band to band move. We know how it's reacted after such things normally. How to join this one? Well, this is a bit tricky, but from my point of view, exactly like the dollar yen, this resistance, the current resistance, has to hold. Then we go to the 4-hour chart and a break below this beautiful supportive range like 123.30, 123.20. If it managed to break it and hold below successfully, it should gain a bearish momentum. If you I think we should look for these sell opportunities. Another interesting pair I see on my in front of my eyes. This is Euro Aussie. I think it should easily go higher to 127.70, maybe 128 or so. Then I think it will create ABCD like this, okay, like this, and from here would gain a bearish momentum back to the daily 20 MA or so, maybe even lower, new lower high. So just let it go and look to sell it with combination of the daily hidden divergence and 4-hour chart double top with a divergence, or double top with an angle with a divergence that should form itself here. Then, as I said, I expect it to drop all the way down to the daily 20 MA, which is around this trend line, as you can see. All right, as you can see. This is another great opportunity from my point of view. And few words about gold, silver, and indices. That's my main opportunities for the forex, of course. Well, gold and silver are very tricky. I'm not convinced they created a bottom. I think there is a bit more to go. And I would say that as long as the gold will hold below 1480, which is very, very powerful resistance, as you can see, we should look for sell opportunities rather than buy. I would not be surprised if the gold within several weeks we will see that here around 1250, 1170 range. Will not be surprised at all. Same story about the silver, of course. I think we are going lower, bit lower. I admit I never saw such strong drop as it happened. I was looking, as you know, for a stop around 24, 25. As I mentioned, that it never stopped there, it just kept going. So if this kind of falling knife, we never try to pick a falling knife. Not convinced this is the end, as I said for the oil. Same for silver. As long as this one will hold above 24.70, 25, I keep my bearish opinion that it should and could easily go to 21 or lower, maybe even 20, maybe even 19. But yes, I think it is creating a bottom for long term here, and in several weeks it will stop and push up again. My opinion about the indices, well, you know how bearish I am. I think it started this week. We got very strong bearish candle on Dow Jones. We got a very strong bearish candle here on Nasdaq, on S&P. For me, it looks very bearish. For S&P, of course, this support has to be broken. Then we can talk about move to the next place around the next support, like 1480 or lower. For the Dow Jones, it has to place itself below 14,300 in order to continue much lower. But again, as I said, the higher it goes, the stronger the down move will be. I think the down move started. Time will tell if I'm correct here or I'm wrong, but you know where I base my opinion from. Monthly chart. Such monthly divergence cannot lie. Something terrible is waiting for the indices market. What? Why exactly? No idea, and I don't care. Watching that, I know I should be concentrated on a sell rather than on a buy. And what makes me feel better about my positions, that more and more analysts start to say buy stocks full power. For me, it means sell stocks full power. Again, I trade here like an investor. It means I accept a drawdown. I don't have any problem holding a drawdown because I trade with negative leverage, right? Ultra small lots. And don't get confused and think with the very small lots you cannot earn money. Yes, you can. With a huge drawdown, as I expect it to happen within several months or so, you can gain here a beautiful move. Beautiful profits. This is why I prefer to treat it as an investor. Remember, I'm not looking here to be correct. I might be wrong, and actually I was wrong for several weeks. I don't care about that. I'm looking to make money, and I show you how to make money. I'm not showing you here to be correct. I'm okay with being wrong. At the end, I want to make money, not to gain some titles. No. And that's why I prefer to treat it as investor. Sell, very conservative trading, investor style trading. Enjoy the down move, the big down move when it comes, and it will take weeks until it comes, of course. My opinion about the natural gas, well, you know, I was talking about the sell. I still talk about sell. 440, 460, 480, each of them very important levels. It could go for weekly duplication, which is around 460, maybe a bit higher. Pay attention for this RSI aiming too high. There is a weekly divergence and a daily monster divergence forming. Whenever it makes the next stop with the next divergence, again, like investor, I suggest to make a sell. From my point of view, natural gas will go low, pretty strong whenever it successfully gains the momentum. 410 was my first level to pay attention to enter, sorry, as you remember, 410, 420 with the divergence. I am in, of course, and I plan to increase that with the next stop. Next stop should be on one of the resistances with this daily beautiful divergence. Again, within several weeks I expect the natural gas to gain Very, 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 very strong down move. This would be all, friends, for this week. I hope I clarified few things, and I hope you find it useful, and I enjoyed it. I know I enjoyed it, as every week. So I wish you a wonderful week and good trading, and thank you very much for your time watching this video. Yours, Vladimir Ribakov.